Hey, hope everybody's doing well. What I wanted to share with you today was something interesting I learned on the ThinkorSwim platform, and that's your ability to do some great candlestick pattern charting, right? So again, there are like so many different variations in the candlestick. You've got Harami, you've got Doji, you've got three rising soldiers, and so on and so forth. But there's one pattern that actually works quite well, which is called the inside bar, right? And the premise behind the inside bar is when your current bar is completely engulfed by the previous bar, right? And I'll show you that with a live example, right? So if you're in a downtrend and you actually get an inside bar that could, in many situations, imply that the downtrend is now exhausted and the buyers and the sellers have reached some kind of a state of parity, right? And the trend could actually reverse. If it is in a continuation pattern, right, the stock's already bullish and you have an inside bar that could signify a pause in the state of the pattern that you currently have, and that might further continue, right? So in order to look at that, you click on this thing called the pattern and click on the select button and click on candlestick here, right? So first of all, you can learn something really useful. So if you're trying to learn and figure out what these different candlesticks mean, you can click on this question mark and it'll give you a pictorial example of what it looks like, right? So this is the evening doji star, and this is usually followed by like a bearish candle, right? So uh, in most situations, this is actually a bearish pattern, right? And again, you have other examples. You can look at what a hammer means, and this is a bullish pattern, especially if it occurs at the end of it. But that's not what I wanted to show you. I wanted to show you the ability to create your own candlestick patterns without writing a single line of code, right? So the way you start is click on the create button, and then you create a mixed candle here. And instead of 5, we're going to just start with 1, and then you add another candle here, which is also a mixed candle. Same thing. I'm just going to go with 1 here, right? So one of the things you can do is you can you can create code by just connecting the highs with the lows and the highs or close of the previous bar in any combination that you want. So what we want this bar to be an inside bar. In other words, the high of this bar should be lower than the high of this bar, and the low of this bar needs to be greater than the low of the previous bar, right? So let's say you take the high and you say this is greater than or equal to, right? I'm sorry, it's the other way around. It has to be less than. We have it set up correctly. So the high of this bar is greater than this, and then we want the low of this bar to be higher than this, right? So we'll connect the dots here, and we'll say greater than or equal to, right? So now we have what's called an inside bar formed here, right? So far we haven't written a single line of code. Now this particular chart pattern signifies a period of consolidation, right? So this is like a period of low volatility and range contraction. Now let's add another candlestick pattern here. We'll call it a mixed candle again, and we'll just go with 1. So what we want here is not the high, but the close to be higher than the high of the previous bar. So we connect the close to the high and say this is greater than or equal to, right? And in this case, we want the low to be above the low of this, right? So we'll take the low here, connect it here, and say greater than or equal to, right? So we now have formed this pattern. This is the inside bar, and in this case, we take out the high of the previous bar, and at this particular point, when it takes out the high, that's when you go long, right? What we're going to do it, we just call it test and save it here. All right, and now we've applied it to our current chart, right? So now let's take a look at square. So whenever you get the up arrow, you've actually taken out the high of the inside bar. So you can see, let's just take this example, it's much clearer. So, we had a little bit of a downward pattern, and finally, we come to an area of consolidation or a parity where, you form an inside bar which is this magenta color bar. Now, as you take out the high of that bar, at this point you can go long, right? The same thing happens here, right? You have an inside bar, the high gets taken out, you can go long. Again, you're already in a bullish pattern, and you have a little pause. You have an inside weak, and you take it out, and the stocks keep moving. Now you can use this for any example. So I have a scan that I created called inside out up, right? In other words, it had an inside bar and then an out day, right? So let's just take a look at that. And this scan was on the daily chart, right? So as you can see here, we had an inside bar, took out, the stock moved up. Again, we had a big run up, which is an event-driven thing because of results coming out. The following day, you had an inside bar. The stock goes into a period of consolidation, and when it takes out the high again, right? That's your long entry, and you can obviously place you know a stop loss just below that, right? So you can use this on any time frame, right? It's a good, easy, simple concept to use and understand the inside bar and the break of the inside bar, and this could happen in either direction. So if you took out the low, it could set up as a nice shot, and you can use this, as I said, on multiple time frames. One other thing I wanted to show you was like you go back here and you say you're interested in like one of the candlestick that's of interest to you. So let's say you want to find old stocks, or you want to be notified when you get a hammer, which is a bullish pattern at the end of a downturn. So you add selected, click OK. Now I've actually already run a scan here, and which is find me all the stocks, and I'm looking at the 15-minute candlestick chart to see where do I get a hammer, right? So let's go take a look at this stock now, Splunk, and we will look at the 15-minute bar on this one, and what you see is a hammer that got formed, right? In other words, the stock, closed at this point 105.52, went all the way to 105.23. The sellers couldn't take it down any further, and the stock closed at the top end of the range. Now, how would you trade it? It's very simple. So you would trade the stock when it takes out the high of this bar, and you can set a stop loss below 105.24. So if this continues, you should see the stock move up. This is something we can just keep in mind, and we can trade it, if this is something that you normally do. So hopefully this helps out. I'll talk to you later.